Hey everybody, this is Danelle. Thank you for joining us here at Networkchain. Today we are going to talk about the news over the past week, particularly what's been going on with regards to the payment system the Federal Reserve just introduced, FedNow, which was launched earlier this week. So we'll jump into that and what that means for the rest of the traditional markets around the world. So as usual, let's go ahead and start with the cryptocurrency market update. You can see here that Bitcoin is currently trading just above $30,000. It's pretty much at the same price that it was 7 days ago. It's dipped down to about 29,000 a couple of times this week, but for the most part it's staying in that 29 to $30,000 range. So we're still ranging between that 28 to 31, $32,000 range. So everyone's just waiting to see whether we're going to get a pop up or if we're going to get a slide down. So we're still waiting to see what happens, but currently right now Bitcoin is holding fairly steady. Ethereum currently trading at $1,888. It's down 2%. And then you can see some of the other top 10 coins are down a small percentage as well. It looks like Solana's taking a bit of a hit, down over 9%. And Tron has jumped into the top 10, currently at 8 cents, up 4.65% over the past 7 days. So as I mentioned, the Federal Reserve has now launched something called FedNow, which is an instant payments service. So generally, when we are dealing in money, particularly with the banks that we do our business with, it takes several days, sometimes longer, to actually settle those transactions when you're trying to make payments, whether it be from your bank account to a creditor or peer-to-peer. It tends to take several days because they have to check the ledgers on the back end to make sure that the money that you have in your bank is what you have and that you're able to now send it over to whatever creditor to pay whatever bill that you have outstanding, or to be able to pay your friend whatever you're trying to do with that particular transaction. So now the Federal Reserve has launched something called FedNow, which is creating instant payments. So instead of using the older system that took a little bit longer to settle payments, you now have this FedNow instant payment service that is supposed to improve on timing in providing instant access to paychecks. So when you get paid, you now can use that money immediately as soon as that money is deposited into your account. And it also will be helpful for a variety of different transactions, particularly for these larger big banks that are transacting in billions of dollars. As you can see here, Jerome Powell, the Fed chair, said that the Federal Reserve built the FedNow service to help make everyday payments over the coming years faster and more convenient. Over time, as more banks choose to use this new tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck, or a company to instantly access funds when an invoice is paid. So as you can see, some of the early adopters include JP Morgan Chase and Wells Fargo, which are two of the largest banks in the United States. And we would imagine that more banks will continue to jump aboard. I'm sure they're just waiting to see how everything goes, as this is a new service that was literally just launched this past Thursday. And if we go into learning a little bit more about FedNow, as you can see here, it is an instant payment service developed by the Federal Reserve for depository institutions just in the United States. So some people who are hearing now a little bit more about XRP and their case that was ruled by Judge Torres, the summary judgment ruling where it said that XRP is not a security. The point of XRP, the token, is actually supposed to be used to help banks explore using the blockchain and be able to make transfers worldwide in a quicker time span, as opposed to the old clearinghouse payment system that has been used for several decades. And so this is basically competition to XRP, but XRP is worldwide. They are partnering with many different banks around the world, and FedNow is strictly based with the United States. So as you can see here, it's also going to operate on a 24-hour and 365-day-a-year basis, as opposed to the current system and the traditional banking system, which is generally closed on weekends and holidays. And it looks like the transaction cost is going to be a lot cheaper as opposed to an ACH transaction. So this is not the same as CBDCs. There are a lot of other countries that are exploring and building their own central bank digital currency. But right now, the FedNow is just a payment settlement service through the Federal Reserve, and it's not a liability of the federal government. So that's why it's not a central bank digital currency. So you can go here to this Wikipedia page to find out a little bit more information. And there's also a ton of articles that came out this past week about the FedNow service. And obviously, in due time, we'll learn a little bit more about how well this launch goes and how much this will help improve the financial services system, particularly in the United States and a lot of the larger banks that are now looking to explore this transactional service. So we talked about JP Morgan Chase being one of the early adopters in the FedNow service, but they also have been building their own blockchain for unleashing the power of tokenization. So they have something called Onyx, which I believe they launched in 2020. And basically, as you can see here, it is an asset tokenization platform that's going to enable financial institutions, asset managers, and fintechs to unlock untapped utility for their financial assets. So they're basically going to be leveraging the blockchain to be able to tokenize all different types of assets. So what do we mean by tokenizing assets? Basically, with stocks, for example, back in the day, before everything was digital, and now that we can just go to our brokerages online, on our phones, on our computers, we can, buy and sell and trade stocks using the internet and online services. But before, you actually had a stock certificate that was exchanged to show your ownership of a particular stock in a company. And so what is going to happen now with tokens is that tokens are basically going to be the same thing, because those stock certificates were basically a token as well. So now you'll be able to make assets divisible using these tokens. And the blockchain, what's great about the blockchain is the fact that it provides an extra security level, and there's also a certain amount of speed depending on the type of blockchain that you're using, that's going to not only provide the security and the speed, but it also provides transparency, because that's what the blockchain is that it's a public ledger. Now, there will be blockchains that are private, and this is a private blockchain that JP Morgan has built, and they so far have done billions of dollars of business with relation to this new service, the tokenization of assets. And what's going to be great about tokenization of assets is that's basically going to democratize the financial system, which is something that Larry Fink, who is the head of BlackRock, and we've talked about him and BlackRock in past videos, meaning that it's going to provide more opportunities for people like me and you, investment opportunities and ownership opportunities in assets that usually are more difficult to be able to have access to, especially if you don't have a certain amount of money. So now, if you want to invest in a commercial building, for example, now they can tokenize that building and split it up into however many different ways. So let's say there's a building that's worth $500,000 and they want to split it up 100 ways. So each token would be worth $5,000. So if you have $5,000, you now would be able to buy a token in this particular building. And if that building over time starts to develop more value, given, the businesses that are using that building and the marketplace and the location of that building, if that building then becomes worth $1 million, your one token now becomes worth $10,000. So you didn't have to invest in a $500,000 building and try to put down a ton of money for a down payment. You now were able to invest in that building just using that one token and that $5,000, and you were able to double double up that money once that building became worth more money down the line. So there's also going to be other ways that tokenization will be used. As you can see here, digital identity in Web3. As we know, many of us are now so connected to our phones and to our digital identities. When you think about all of the pictures and the information that we put online, from TikTok to Instagram to Facebook, things of that nature. So it's going to be important to be able to tokenize data, because data is currency. The biggest companies in the world, they have made trillions of dollars due to data. So now we'll be able to be the gatekeepers of our own data, and tokenization will allow us to streamline that process. So there's definitely going to be a lot more to come. So blockchain and cryptocurrencies are definitely going to disrupt many different industries, not just the financial services system, but this is just an example of how the blockchain will be put to use in the financial services system. So as you can see here, the future of real estate. This is a Forbes article that talks about the tokenization and its impact on the industry. And as you can see here, the real estate market is undergoing a significant transformation with the emergence of tokenization, a process in which real estate assets are converted into digital tokens stored on a blockchain. This allows for digital ownership and the transfer of fractional shares. So just as I mentioned, you'll be able to get a fractional share of a particular real estate asset. So blockchain services will serve as the backbone of the process, providing a secure and transparent platform for storing and transferring these tokens. Smart contracts are self-executing agreements that define the contractual specifics and automatically execute transfers when certain conditions are met. So Ethereum, this is exactly what it was built upon. They are now allowing for smart contracts using the blockchain. So that's why many people are very bullish on Ethereum, because what happens is you'll be able to build code into a particular contract, and it only executes if those particular parameters are met. If not, then the contract does not go through. So this way, it's going to be able to eliminate a lot of the middlemen that are involved with certain transactions, particularly in real estate, when there's so many different dealers that are involved when you're trying to buy a piece of property. So of course, there's going to be some challenges, part of that being regulation. And that's still going to be an ongoing and slow process, because a lot of times it does take time for the government to actually, implement and create law and regulations. But in due time, this is something that could be the future of real estate and investing, not only in real estate, but also so many different other industries. So we just wanted to give you a general idea of the power of the blockchain and tokenization and what's already happening in the market, particularly in the financial services department, as well as the future of real estate. But as we mentioned, it's also going to be a major player when it comes to our digital identity and digital assets, and being able to basically tokenize anything that we own, not only from our homes, but from our cars to any of our collectibles. There's just going to be so many different ways that we'll be able to use the blockchain to hopefully give us a better opportunity to invest in ourselves and others and create a brighter future for ourselves and our families moving forward. So thank you for listening to this video. We really appreciate it. We're going to continue to update you on everything going on in emerging markets, particularly in the world of cryptocurrency and NFT. In the meantime, please take care, and we look forward to linking with you on the network chain very soon. Bye-bye.